Hello, my name is Mike Swanson. I run the website WallStreetWindow.com, and the odds are that you're watching this video because you got an email from me telling you that it's up and on YouTube for you. Now, if you're not on my free email list, you got to get on it so you will get all my future updates. I typically send out an email every single morning before the opening bell, often with a stock idea or a trading idea, but always with what I'm seeing is the key things you need to be aware of on that market trading day. So click the link on the bottom of this video, associated with this video, to get on that free email list if you're not on. Now, today is a very interesting day. I'm going to do an update on my Robinhood trading account. I actually haven't done an update on that account for over a month. It consists of 10 trading positions, but one of the reasons I haven't done an update because I haven't done a trade. I typically get into a position as long as it's working. I really have no reason to sell it. I'm not someone jumping in and out of these markets constantly. When something's working, I don't, that's good. I'm not, I'm probably not the type of customer Robinhood's happy with because I don't trade enough. They really encourage people to get into manic trading. They make money by the more trades you do because from that order flow. So I kind of encourage people to get into extremely volatile stocks or trading instruments that they can get shaken out of, and then they have to trade again, and they really don't end up spinning their wheels quite a lot. And we're now at a moment where this is happening more than it's ever happening before. There's a lot of exciting things happening in the markets right now where things are going up big. Gold went through 1800 last week. Silver also had a nice big rally. Mining stocks are really going up. Energy stocks are going up. Commodity stocks are going up. Today, the Dow is up. But as you'll see in a few moments, most of the stocks that are the most widely and popularly owned are down among Robinhood traders. And that's something we're going to talk about. Let's switch to the account. Let's see what's going on in the markets today and dive deep into what's going on so we can understand what's happening and how to take advantage of this situation going forward. And things are changing right now. So this is actually a key moment for these markets that we're in. Now I'm going to load up my Robinhood account and take a look at what's going on. As I said, I actually haven't even loaded this up for a few weeks because it's not my main account. I got an account, substantially larger than this with well over 100 stocks in it, over 130 individual stock positions, a large amount of money. But I opened up this Robinhood account as a teaching instrument, something that I can use with people on YouTube. And the way I do it is I divide the money up into 10 and put 10 individual positions. You can see them listed on the right: WPM, CXP, STNG, LTC, O, DHT, PAS, FNV, KGC, SLV. SLV is a silver ETF. And if we look, how are we actually doing in the total return of these? We're up 10%, 18%, 4%. Actually, that one's down. That one's down. But overall, we're up very nicely. So I might be making some changes. I didn't realize I got two positions of losses, but the gainers more than outweigh for the losses. There's a lesson in that and why I got 10. Because if you put all your money in one and it's a loser, then you lose big time. But if you spread out in many things and most things go up and two are down, hey, you're in a great situation. And that's why we're up 1.4% in the last 7 trading days and up 4.75% in the past month, while the NASDAQ has been wobbly. And as you'll see in a few moments, most of the favorite Robinhood stocks are suffering big time. And we've seen Bitcoin and other cryptos, do nothing. Bitcoin's done nothing in the past 6 weeks. Dogecoin shot up and collapsed over the weekend. So coin people are riding roller coasters while I'm a steady Eddie, basically is the way I like to think of it. Now I got a little gift today to show you how long it's been since I opened this up. So on April 18th, I got a gift stock for being a Robinhood person. And I got 2 gift stocks. Let's see what we got. One. I want to claim my gift. if you open up a Robinhood account uh, using a link, I have no idea what this stock is. I got 2 free stocks. This need to get something free, As Zinberg, I tell you right now, I saw that stock is down. That's junk. I don't want to own that at all. How can we get rid of it? It's not. These are bad stocks, and there's a lot of bad stocks out there, and that's what we're going to really talk about today. Where's these bad stocks? I think they gotta. I think it takes a couple days for these. I'm gonna sell them if I can. It might be something. I guess it takes a couple days for them to show up in this account, but there's so many bad stocks going on, and that's what we're going to talk about. What's going on in these markets. So if we turn to it's 2:30. This is how things look. The Dow up 129. The Nasdaq down 300. The Russell 2000 is down 2. Bitcoin down 1%. Gold up nicely. But the real story is weakness is in a big pocket of the market. The Nasdaq is droopy. It's not just the Nasdaq; it's so many widely fad stocks. Kathy Wood's ARK ETF down 35% from a recent high. And if we turn here to Robinhood, they've got a list of the 100 most widely owned stocks by everybody. That I'm not, I don't own a single stock on this list here, but we can look and see this is what's going on in these stocks today. Tesla down 5%, Sundial down almost 3%, Neo down 5%, losses everywhere. Amazon down 3%, Plug Power down 10%, GameStop down 10%, Zomedica down 7%, Palantir down 6%, GoPro down 12%, Origami down 8%. Coinbase is something that's up, but Coinbase has been falling for the past 2 weeks. It's almost down 40%. AMD down 3%, Facebook 5%, Tilray 7%, Ideanomics 6%, Fuel Cell Energy down, Virgin Galactic 7%, BlackBerry 3%, Zynga 5%, Workhorse 14%, Kronos 5%, Square 7%, DraftKings almost 7%. Here's 3 stocks up. ARK ETF down 5%. An entire ETF down 5% in a single day. That's a management fund down 5%. That's a devastating loss for managed money, and that's something we're going to have to be talking about. PayPal 3%, Alphabet 2%, Riot Blockchain down 9.5%, Nano 5%, SOS Limited 7%, Vijay Pen 4.5%. Oh my gosh. The Xpeng down 4%. Blink Charging 7.8%. Is Blink Charging a good investment? What the heck? What is it? I have no idea, but it's one of the most popular stocks in Robinhood. Taiwan Semiconductor, Pinterest 1.72%. The point I'm making here is the S&P is barely down at all. The Dow is actually up. Gold is up. Mining stocks are up. But all the stocks in the top 100 list here, 90% of them are in the red. Many of them down substantially in the red. Why? Well, the reason why, the NASDAQ 100, which is also heavily weighted by some of these stocks, is down 2% today. But what's happening is these stocks in Robinhood were big winners last year, and people chased them. They saw them going up, and they gravitated to those stocks. Now those stocks are lagging the market. The ARK ETF is heavily weighted by these stocks. Many of those stocks on the top 100 list are owned and dominate the ARK ETF. And if we look at the ARK ETF, it shows us what's going on with the speculative elements in the market. ARK ETF is below the green line on this chart. That's the 200-day moving average. That means it's in a long-term downtrend. You want to own stocks, you want to own ETFs, you want to own sectors above the 200-day moving average. You want to buy things beating the market. If you're in things that are lagging the market, when the market has down days, they tend to get smashed. When the market goes up, they tend to go up more in the market. To beat the market, you want to be in the things that are beating the market. ARK ETF is no longer beating the market. Most of the top 100 popular stocks no longer beating the market. On the bottom of this chart, you see a ratio, ARKK. Ratio means divided by SPY. It's going down. That means ARK ETF is lagging the stock market, lagging the S&P 500. From June till February, that ratio is going up because ARK ETF was beating the stock market. most of those fad stocks were also beating the performance S&P 500. So people piled and piled and piled and piled into them, and a herd was created and developed. And herd behavior works until it stops working, and then it turns into a very ugly situation. And that appears to be what's happening with ARK ETF and its holdings, and with the top 100 most widely owned stocks on Robinhood. Now, how did this situation come to be? Well, if we go and look at the design of Robinhood itself, and it's the most popular broker in the United States, as in terms of the most number of trading accounts opened up in the past 12 months. Millions of people open up accounts, but how do they make their trading decisions? By being a part of the Robinhood herd. So if we look at the Robinhood thing itself and how it functions, when you load it up, this is what you see. Now, the stocks that I invested, I did it through analysis of the chart patterns, the sector, and dividend payouts. Three things that Robinhood, when you log in, does not show you at all. I've got other research tools to figure out what I want to buy. I don't use anything on Robinhood to figure out what stocks I want to buy or own, except unless I'm given one for free. Now I own it. Now I got to dump it because they're garbage. That I got to get out of those, free up that money. Crap stocks. But those are the kind of things that are widely owned and people want. That's why they give them to you when as gifts. I don't want gifts like that. I want to move. I'm going to sell, liquidate those crap stocks because Robinhood's dominated now by crap stocks. It wasn't like that a year ago, but it's like that now. Why? How did this situation develop? Very simple. When you load up Robinhood and it's on the computer or on your phone, how do you research what you want to buy if this is all you're using? Well, you're going to gravitate to news stories and popular lists. And Robinhood today did something that was pretty bad. Actually, I should have prepared this. I will show you something in a few minutes. But you gravitate to these popular lists. And what are the popular lists? Crypto, cannabis, altcoins, Bitcoin family. That's dominating the top. Ethereum family. 1, 2, 3, 4, 5, 6, 7 things I've listed off here. Half of them are about crypto. And that's how Robinhood's guiding new people, new customers into crypto. Why? Because crypto is so volatile that it makes people jump in and out. Because if you buy and something goes down 20%, you get out, you try to get in something else. That's a sell. That's an order flow going to Robinhood. They don't want you getting into steady eddies that you can hold and just relax and have things go up. They want you getting shaken out because getting shaken out makes new trades. Now, they're not going to say that, but that's a result. Maybe I'm wrong. Maybe they want you to win, but if that's what they want, they're still pointing people into these kind of situations. And if we look at crypto, let's load this up and see what are the kind of things happening in crypto. Well, Dogecoin tells the big story of what happens when you get into a herd. Dogecoin in the past couple months went from a nickel all the way up to 70 cents on May the 7th, and now it's collapsed. It's down over 45% in like 48 hours, a complete bubble bust. And that's what happens when you invest in things that the entire herd piles on, and it becomes a self-fulfilling prophecy until the pyramid it collapses on itself. It's turning investments into pyramids that then collapse. That's what herd investing does. But Robinhood encourages you to become a part of a herd. It works until it stops working. Then it turns into a disaster. That's the lesson of Dogecoin, but it's also going on with individual stocks. And that's where the situation today is becoming a little bit troublesome. And again, if you look at the 100 most popular stocks, I'm just going to pick one out that this is, randomly. Let's look at Plug Power. What's the story in Plug Power? Boom, it went up and peaked out on January 26th, and now it's collapsing. It was on the top 100 list. People log in Robinhood. They see it on the top 100 list. They might start paying attention to it, seeing it go up day after day or week after week. Then they say, I'm going to get on board. And then it peaks out and then it collapses. and now there's people losing a lot of money. It's one of the top stock positions. So what are they going to do? They're going to sell, and then they're going to see something else on the list and buy that. Oh, that's order flow for Robinhood, but it's a losing situation for the person that did it. Why are they doing it? Because they're new to the markets. They have very limited information on this app. Just a list like this is not enough to give you a sensible reason to invest in anything, because you're only looking at price action. You're not looking at earnings. You're not looking at valuations. You're not looking at the sector anything is in. You're not looking at dividend payouts. You just nothing except this list and charts with no indicators on. They don't even have the 200-day moving average on these charts. They don't even have volume on these charts. Almost no information. And this is what millions of people are doing to trade these markets. And they can't tell the difference between a cryptocurrency and a stock. And Robinhood it was great on the way up on these stocks and situations as the herd got in place and built up. But now that so many of these positions have peaked and topped, it's a complete disaster. And that's why the Dow is going up, because these people were not in Walmart. They weren't in Disney. They weren't in Johnson & Johnson. They weren't in Exxon. They weren't in Caterpillar. They weren't in the Dow 30 because they thought, oh, the Dow 30, those are old stocks. They're not fun. I don't want to think about that. They're not, able to, and the herd wasn't able to force those stocks up, like they could a situation like Plug Power, like they could with Square, like they could with Roku, like they could with Sundial, like they could with so many of these other situations and these crazy crypto coins, which is probably the biggest disgrace I've ever seen in the markets, is when there's an online broker that is pushing people into crypto. Crypto is one of the most volatile things that there is. And what volatility creates, it does create opportunity on the upside, but it creates massive risk on the downside. So something that can go up like Dogecoin did also can go down just as fast as it goes up. And that's a complete disaster for people who get sucked in at the wrong moment. And something that really people need, and I think as someone that, I got an email list with a large number of subscribers on it. I've got something of a following. I'd put it that way, but I'm not the only one, out there that's got a following in these markets. And I've been doing this now since 1999, talking about the stock market and trading. But there's also Jim Cramer. There's people on CNBC. There's on Fox Business, other YouTube people. And I think it's time for people to do what I'm going to do in this video and speak out about these crypto coins and what they're doing to people, and how not enough people are speaking out. Warren Buffett spoke out 2 weekends ago, and that's great. And people listen to him, and because they should, because of the experience he's got. But what's disgraceful is what is going on with those that are promoting these coins, that when they're encouraging people to take risks that could put them over their head and is unwarranted for the position that these people are in this industry of whether it's being a spokesperson in the financial markets, whether that means you're a money manager, someone like me with a website and an email list, and or a television personality. There's nothing wrong with someone that buys a crypto. There's nothing wrong with speculation itself. I speculate in the markets. I will sometimes buy stocks under 10 cents, so-called penny stocks. But I will not tell people to put all their money in it. And I certainly do not make that something where I, say do nothing else. I teach steady Eddie type investing. The positions I show in my Robinhood account are stocks with earnings and dividends, and they're in uptrends. Two are down since I bought them, but as a whole, all of them are above their 200-day moving averages. They don't crash 30% a day, go up 50% a day, and do all these crazy things like so many of those crypto coins do to people. But let me show you what is going on and is one of the reasons I'm doing this video. So I got this Robinhood account, and one thing Robinhood does is sends out these emails to people, and they got one titled today, Crypto Coin Crowding. And in this email, it talks about Elon Musk, Dogecoin, how the tech stocks fell. And then it does this, which is an absolute disgrace. One of the worst things I've ever seen a brokerage house do, and someone of this sort of position in the financial industry. I mean, there's probably, who knows how many people, millions of people get this email. And this is what it says. Crypto mainstreamification has reached a level that goes far beyond Bitcoin. 14% of the US population now invests in cryptocurrency. And this line, and crypto owners could double in 2021. This year, Bitcoin has nearly doubled in value, and altcoins have seen bigger rallies. Ethereum is up. Dogecoin has soared 13,000%. No mention of the crash that just happened in it. According to a Gemini survey, 2/3 of US adults who don't own crypto are crypto curious. 60% of the crypto rate their knowledge is low. And then it lists all these people that are going to start buying the coins. The takeaway coins are here. It's possible that only a few might survive out of hundreds, but this is basically telling people to buy coins. This email is telling people to buy coins. These are people that many of which, the vast majority, have very little experience investing in the markets. So this is advocating, they're telling their customers to buy the most risky things trading in the markets. No sense of safe investing, a strategy, nothing. They're just guiding people into herd-like behavior. And this type of herd-like behavior is why most of the stocks today on the top 100 list are down while the Dow is up, because herd-like behavior turns into an absolute debacle when it stops working. So to sum up for you this theme, millions of people opened up Robinhood accounts last year. They got into the same stocks because they're looking at the same list of stocks, and it created a bit of a self-fulfilling prophecy on the upside. But once the momentum peaked, which it did in February for this sort of herd that got into the markets, now as a whole, these stocks are dropping. And you can have a day like today as a result where the Dow's up over 200 points, and as a whole, these stocks are dumping. And you can see it. That's why this ARK ETF is falling, because this ETF is dominated by many of the same stocks that are Robinhood favorites. And so is this Buzz ETF. The Buzz ETF is explicitly designed to be in the same stocks that the masses are in, the Robinhooders are in, that are most searched on and talked about on social media. And this fund is now, it came out in March, but look, it's way off. It's over 10% off the high, while the Dow is making a new high. So what is the takeaway you should have? Well, if you've been following me a long time, then you probably have. There's nothing really new here, because hopefully you're invested as the way I'm invested, in things that have nothing to do with this Robinhood type popular stock crap or ARK or any of this crap stuff. We want stuff in sectors going up above their 200-day moving average, stocks paying dividend. And if it's penny stocks, speculative stocks are still tied to these trends, because that's where you win, and that's where speculation works. Speculation fails when you're at the end of a sector move and you got in, in the ninth inning or when the game's over, and then you end up with egg on your face. And that's where I think we're now at. I think the past 6 weeks since February has represented a shift in the markets, where all that fad momentum stuff that worked so well last year now no longer is working. ARC is below the 200-day moving average and is making a new 52-week low as I speak. It failed to hold its recent support. It had a double bottom and it's through it. And you can look at the stocks in it. Square's one, DraftKings, which is also a popular. It's dumping. This is not a good. You don't want to be in broken stocks trading below their 200-day moving averages, stocks making new 52-week lows. To beat the market, you got to be in stocks in sectors beating the market. If you're in laggards, you get crushed. And that's what's going on. The top 100 Robinhood list is dominated now by laggards. If you open up a Robinhood account, you're now losing money. What you got to do is use a completely new strategy than what you've been doing. Simply reading crap on message boards, loading up the app, and buying what other people working or were buying no longer is going to work. You're going to have to think. You're going to have to do real research. You're going to have to get into winners, and that takes real work. And now because the past strategies that were working for these Robinhood people no longer work at all. In fact, they create massive losses. And the answer isn't jumping into another crypto coin, because Dogecoin went up and even though it crashed, I can hope this other gamble coin can go up like that one did. That is becoming the riskiest thing to do. And it's just a bad situation. So these are the things I'm thinking about and really kind of wanted to drive home hard today with you and everyone else out there. I just really believe more people need to speak out like I've done in this video. Maybe Jim Cramer will speak out on CNBC, although I turned on CNBC last week on that Fast Money show. They spent 15 minutes recommending cryptocurrencies to people. They need to get on there this week and say, okay, it's getting too shaky and dangerous now. Get in stuff not so volatile, get in stuff that's working. And because this is so many people are in these markets that are really probably for the first time, and they've only because they've been in this for 12 months or less. They're now seeing what happens when I heard trend stops working. So interesting times, interesting week for sure. All this I've said is not a tone of discouragement if you have a Robinhood account that you've opened up the past 12 months. I'm not saying having a trading account is bad at all. What I'm saying is that the game has changed and you got to be on top of this because this is how markets work. What works for 6 months doesn't always work for the next 6 months. The game changes, and long-term success means that recognizing that, adapting to that, seeing what sectors are new because there are a lot of things in uptrends in these markets, but they're not in that Robinhood top 100 list. There's going to have to be a final flush out of those stocks. I think that's what we're heading for, a flush out. It's going to be brutal. It's going to be tough, but it will come. And then, we'll go on from there. So, that doesn't mean everything's going to fall because everything's not falling. The Dow is up. Most mutual funds are probably doing okay today. Not ARC, but most are. Energy stocks are doing good. REITs are doing good. Lots of stuff's doing good. A lot of stuff that people are most familiar with that have Robinhood accounts, not so much. They got to get familiar with the winners. And that's really what I try to do in most of my videos, my emails and things I put out, focus on what's working, what's winning. But this video, I just wanted to talk about my thoughts on what's going on and give me a chance to speak out on especially after I saw that email this morning. So anyway, all that said, I'll be talking with you later on.